But I don't believe it, baby. You come here for the truth, and the truth is nobody knows. We're all a bunch of clowns making some ridiculous predictions on the market. Today, folks, the market is absolutely tanking yet again. And don't be a squirrel without your nut. You gotta have mental fortitude when the waves and the tide starts to go back out, baby. Don't be fearful when everyone's fearful. You know damn better. As we talk about the Magnificent Seven, these juicy gems of tech companies holding up the entire market, I got some fascinating knowledge bombs that I've come across that'll give you a perspective on what the broader market thinks and what's happening. And then of course you need solitude. Come to these videos, watch them for free. And I want to say thanks to the Patreon members. I have a private chat group with like-minded 6-7 figure investors that recently just bought real estate to retiring literally this week, and the conversations are fascinating. So thanks to all those like-minded members. But let's get right into this with first and foremost talking about the US dollar versus the S&P 500, because the S&P has now dropped something like 7.5-8%. We're going to focus on the US markets in this video because it seems like every October there's some cyclical lows going on. I mean, we bottomed out last October. It looks like we're going to maybe bottom out this month. We'll actually see what happens. Who the heck knows? But what fascinates me is people hoarding cash. We've talked about money market funds, GICs, bonds, the fact that people love those high interest savings account. And I want to talk about why people think the market's crashing. But the reality that's so interesting to me is, you know, when you go back to the October lows of 2022, that's when the US dollar peaked. That's when everyone was peak fear, just hoarding cash like there's no tomorrow, just driving the value of USD up. As a Canadian, I own a lot of US assets. And even though my US stocks go down, when the US dollar rallies, I have a hedge against the Canadian currency. So if I ever cash it back out and convert it over, I'm actually just making money on the US dollar, which gives a little bit more cushion to the volatility, right? And the US dollar is driving up dramatically. If we zoom out to the all-time, what's more interesting is that the US dollar is holding a 20-year high, which is even more intriguing because typically when people are scared of the US economy, they leave the US dollar. Like the dot-com bubble, when things were so overvalued and inflated, people drove the dollar down from, you know, the DXY was trading at $1.17 and it dropped as low to 72. And same during the 2008 financial crisis, it was trading around what? It was at 84, 86, and then it dropped all the way down again to 75. Yet in this rocky economic circumstance, all the money wants to be in USD on a global standpoint, which is so fascinating. Now, people are blaming this wicked drop on the recent jobs report where it unexpectedly grew in August to 9.6 million because unfortunately, it can't really say it's a bad economic circumstance when everyone's able to be employed, because that tells the Fed that, hey, it looks like we could still potentially have a soft landing. That means we could raise rates one more time. We could leave rates higher for longer because though, you know, food costs more, people's cost of living going through the roof, they are at least going to be paying those bills, and we can ride out this rocky economic circumstance, which again, this could be the first soft landing in history if the jobs market remains strong. But inflation is like this two-edged sword at this point, because inflation is done. It has been done for a while because core inflation related to food and things we're using on a daily basis outside of shelter and oil have been actually coming down in price. But because oil shot up the last 2 months, it drove up the inflation rates. And because, you know, when you increase interest rates, guess what? Shelter costs go up, the mortgage is higher, the landlord's got to raise, you know, the money on the renter, and that just continues to push inflation higher. It's a self-inflicted wound. So we're kind of just needing oil to come down. Forget shelter. If oil just comes down a bit, all of a sudden inflation will be back in check. So this is just leading people to say, hey, the Fed has control. They'll probably leave rates higher for longer. And that's what they're saying is driving the market crash. But I don't believe it, baby. You come here for the truth. And the truth is nobody knows. We're all a bunch of clowns making some ridiculous predictions on the market. And I think what we're seeing right now is people chasing fear. The market took a bit of a pullback. All these hedge fund managers, they don't want to give up all their gains for the entire year. So what do? They take profit. They put it in high interest savings. They're like, hey, the market's probably topped out. If we just put it at a 5% yield and bond or high interest savings account or GIC, we'll make the rest of the return that way. And that's driven up the US dollar. But it's funny when you look at the market, it's so unusual because if you look at anything outside of the Magnificent Seven, these big tech companies, we would already be in a really bad recession. The S&P would probably be at cyclical lows. You can name any company you love, Disney, Scotts, Miracle-Gro, Procter & Gamble, Pepsi, they're all falling apart right now, baby. And a lot of them are sitting at 52-week lows or lower. So people have just been hiding out in the QQQs, the stocks the Qs hold, the NASDAQ 100 ETFs. This is supposed to be one of the most volatile ETFs you could possibly hold because it's really concentrated in a few companies. But you look at the last 5 days, it's barely moved. I mean, it's literally flat. Yet you go to the S&P 500 over the last 5 days, it's down 1.68% because those lower weightings are crushing it. Hell, even people are too scared to hold Berkshire in this kind of market, which is so unusual. It dropped 7.2%, more in line with the S&P 500, yet companies like Tesla are actually up this week. I mean, if you had to make a guess on what stocks would tank, something tells me you'd have been wickedly wrong. And you don't want to be wrong. You don't want to be the squirrel without your nuts. So how do we stop going squirrely here? And it's by avoiding as much of the clown advice as possible and take it purely as entertainment. I'm listening to YouTubers out there telling me they got hedges on the market. There's huge value in dividend players. So pick up these gems, these AAA rated brands that are at 52-week lows. And my question to that is, if no analyst has predicted this market right for the last year or two, like they've been wrong sensibly, whatever the word I'm looking for is, how do you think your decision is going to be? Or how do you think you're smarter than these top guys that went to economic universities at Harvard, blah, 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 because you don't. So why would you take a hedge? Why would you think you can pick the best brands? What happens if the market melts up, except for the stocks that you bought, and you dramatically underperform because even in the last year, you didn't pick the Magnificent Seven because everyone told you the NASDAQ was in a bubble. You don't buy the bubble and it's bursting, and then it would have been the best performance dip you could have ever bought. So how do we avoid this stupidity? Now, there's nothing wrong, and I truly believe there are some great values in a lot of companies, and it's great to speculate on them with 10 or 15% of your portfolio, but don't be that idiot. Be the guy that knows cost averaging, and aggressively cost averaging when the market takes dips will offer the most, yield, the best return. Rest in peace your soul, Jack Bogle, the guy that created the S&P 500 ETF VOO, man. I mean, this guy made a market cap weighted, passively managed ETF at a low cost, baby. And obviously when the Magnificent Seven took over the market, you saw incredible performance. And, even though the market's pulling back, if money starts flooding in from all this cash sitting on the sidelines, maybe in 2024, and it goes to those lower weighted companies, guess what? It pushes the whole C back up with it, right? And you can't really go wrong. The only thing people do that's wrong is when things like this happen, they get fearful and they don't buy when it matters the most. What you need to do, and the best advice I ever heard, is with this cost average money, you put a little bit extra aside as a so-called investment emergency fund. So when the market drops on a 10% level, you can double up the amount that you're investing over a month. If you can just double up that cost average in periods when the market drops 10%, you know how much return you would have had. Go back to any YouTuber in the last 3 years and show me your returns and tell me they've outperformed the S&P 500, because there are far and few in between, and anyone that thinks they were smart enough to do it was gambling and lucky, and they're leading you down a path where you're going to be squirrely and you're going to hate your life and you're not going to sleep well. That is just my personal opinion here, folks. I mean, take a look at the weightings, because even in the S&P 500, I mean, the weightings have been crazy. I mean, I've never seen so much volatility in the 10 holdings. If you take a look at this passively weighted ETF, Meta was in the bottom 20. But not even, mid last year to October, it was in the bottom 20. It wasn't even a top 10 holding. Nvidia wasn't this high up. Who would have known that this is what would have taken place? I mean, could you have imagined when everyone told you to short Nvidia if you shorted it and how much money you would have lost? Meanwhile, you could have just had it passively weighted in this ETF and you would have got the performance from it. You just don't know. So make sure you do the intelligent thing here, folks. And thanks to all the solitude and like-minded fellows we have in that chat group, which if you'd like to join and support the channel, you enjoy these conversations, hit that Patreon link up below. But stay cool, stay awesome. And as always, I'll catch you in the next one.